Hello everyone, what is up? Hopefully you guys are having an amazing day again. We got extra news for today's video. XRP Pro has tweeted out the grand plan of Ripple. What do we see here? Ripple is working on a replacement for Swift. How to get all of the payment providers onto ILP and how to use XRP as on-demand liquidity. From Chris Larson. Tyler Winklevoss has tweeted out when Bitcoin takes over Hong Kong. Now, look at this, guys. We can see more ads about Bitcoin in Hong Kong, as well as this right there. So there's been more ads about digital currencies all over the place. Credible Crypto has tweeted out, in the last crypto cycle, total market cap went from prior lows of 2 billion to a high of nearly 800 billion. A multiply of 400x. This next cycle will be a fraction of that, but even a 40x run, 1/10 of last of the lows at 100 billion puts us at 4 trillion market cap for crypto. We are just warming up. Very exciting times. Obvious Res is tweeted out, 2021 is the year of our financial independence. I repeat it to you all the time. It's not if the US will pass this law, it's when they'll officially announce it. Bitcoin is going to die, like I said. Let's check this out. The US government is planning the creation of a digital dollar wallet by 2021. Could this be the end of Bitcoin? Introduce a bill to create digital currency accounts administered by the Federal Reserve. According to the draft, the bill was require banks to maintain pass-through digital dollar wallets for certain persons and for other purposes. If passed, all Federal Reserve banks shall, not later than January 1st, 2021, make digital wallets available to all residents and citizens of the United States and to businesses. The term digital dollar wallet means a digital wallet or account maintained by the Federal Reserve Bank on behalf of any person for the purpose of holding digital dollar balances. Look at this, guys. We are very close. Very close. Rule XRP has tweeted out why we need evolutionary, not revolutionary, regulatory initiatives. Let's hear this.
Why we need evolutionary, not revolutionary, regulatory initiatives. This July, Luxembourg, the world's second-largest domicile for investment funds behind the United States, submitted a draft law updating a law from March 1, 2019 that allowed for the registration and transfer of securities by custodians. With this draft law, issuance itself can be based on distributed ledger technology, thereby introducing truly dematerialized DLT or blockchain-based securities. Furthermore, a central issuance account keeper, transfer agent, is required to assume responsibility, and the account keeper has to be authorized by any member state of the European Economic Area, which means that non-Luxembourg credit institutions and investment firms can be the central account holder. 2 weeks later, on August 11, Germany's Federal Ministry of Finance and its Federal Ministry of Justice and Consumer Protection submitted a draft bill for the introduction of electronic securities. The bill intends to revamp both Germany's securities law and the corresponding supervisory law, with a focus on blockchain strategy. The draft differentiates between the keeping of a central electronic securities register by a central securities depository and the keeping of registers for issuing electronic bonds made possible by distributed ledger technologies. It also provides greater regulatory clarity. The Federal Financial Supervisory Authority will track the launch and upkeep of decentralized registers as new financial services in agreement with the Electronic Securities Act, the German Banking Act Kreditwährungsgesetz and the Key Securities Depository Rule. The proposed changes to the legal framework, by adopting blockchain and other new technology, aims to bolster Germany as a hub of business and magnify transparency, market integrity and investor protection. For now, the draft bill is limited to bonds, but it can be extended to any security, including stocks and investment funds. The aim is to receive comments from the German states by September 14 and to pass the regulation later in 2020. The draft law also provides several changes to the prospectus law, the custody account law and other rules so that all electronic securities are treated like legacy non-digital securities. With this, the draft law clears a major regulatory hurdle to the mass adoption of digital assets. What does it mean for the industry? Germany's very conservative government is taking the digital transformation of its securities markets extremely seriously and recognizing the advantages in terms of speed, settlement times and transparency that blockchain technology has to offer. Having first updated existing anti-money laundering/combating the financing of terrorism legislation to allow banks to store and sell cryptocurrencies to both institutional and retail customers, effective on January 1, it has now turned its attention to dematerializing securities with the use of permission DLT or permissionless blockchain technology, for example, public Ethereum. In effect, the draft law states that an electronic security in the form of a token, for instance, carries the same rights and legal investor protections as a paper certificate. This new draft galvanizes the philosophy that there is no need for radical new legislation, rather, legislation should be technology neutral, while clarifying the legal tie between a real-world asset and its representative digital token. More can be done, of course, for instance, introducing machine-readable policies that can update compliance software with zero or minimal manual intervention. At the same time, projects in the blockchain space continue to provide thought leadership and remove technology hurdles by combining secure digital identity with strong online privacy, for example, private transactions on public chains, and compliance oracles that tie digital attributes and attestations to automated policy enforcement in both the area of cryptocurrencies, for example compliance with the Financial Action Task Force's travel rule, and digital securities. Ultimately, digital transformation with the use of blockchain technology will lead to significant cost reductions through the elimination of many error-prone manual processes, better compliance and more effective crime fighting through increased transparency, greater global accessibility to high-quality assets and, hence, greater financial inclusion.
The European Central Bank has tweeted out thread. Innovation in payments enables easier and faster interactions in the digital age. And ECB President Lagarde had at the conference on banking and payments in the digital world, but it also comes in new forms that raise important questions. We are exploring the benefits and risks of a central bank digital currency. XRP Crypto Wolf has tweeted out, France central bank governor said that a public-private partnership would be the best way to issue a central bank digital currency. Let's check this out. The head of France Central Bank has spoken of the potential benefits of private sector involvement in the development and issuance of a future European digital currency. His comments were made at a conference hosted by German Central Bank, the same event where the head of the European Central Bank, ECB, Christine Lagarde, said Thursday that the European Union had fallen behind on CBDC development globally. Once again from XRP Crypto Wolf, policymakers from Germany, France, Italy, Spain, and Netherlands said stablecoins should be regulated within the EU. They specifically called out Facebook's Libra. In brief, finance ministers from 5 EU countries have called on the European Commission to set strict rules for stablecoins. Regulation would be needed to keep the financial market stable, the minister said. The proposed rules could affect the rollout of Facebook's Libra. Digital assets meant to reduce price volatility, typically by being backed to a fiat asset. Once again from XRP Crypto Wolf, former Ripple executive Wikisi Core TV says bank needs XRP after global settlement platform suffers major delay. The platform hoped to launch in 2020, but said it's waiting for regulatory approval. They hope to get the green light in the first quarter of 2021. Let's check this out. A recent delay to an international bank-led payment settlement initiative is just more evidence that legacy financial institutions need to adopt XRP, according to a former Ripple executive. Again, guys, we can see digital currencies in 2020, XRP is needed. But who really knows what will happen at the end of the day. But anyways, guys, hopefully you guys did enjoy today's video. If you guys did, please leave a like, subscribe if you guys haven't already. Feel free to be a member of the channel. I'll see you guys in the next video. Hopefully you guys are having an amazing day, and you guys see ya.
This is the beginning of the greatest economic cycle this country has had since World War II. And I knew the things that Donald would do, and he hasn't even got started. But this is the eye of the motherfucking storm, the perfect storm. It ain't never going to get any better. Never. This is perfect for the QLA model. If I could have written a prescription or a formula, I couldn't have written it any better. Low interest rates, money's free, you stupid. Massive chaos. And Donald's going to rip the economy apart. And he's going to for practice in a good way. This is it. It ain't never going to get any better. This is like a multiple orgasm the rest of your life, you fucking slags that are in the audience. This is it.
Sometimes I don't want to hear what Dan has to tell me. But as I wrote in one of my blogs, the old man, he's always right. Because he's telling you what you don't want to hear about yourself, but what you know is true. And that is, you're not stepping yourself up. You're not stepping your game up. And you get caught up in fear. As Dan says, false expectations appearing real.